Internal Revenue Service IRS tax news. Closing a partnership. A partnership, there's a link to partnership here, is a relationship between two or more partners to do a trade or business. So a partnership can be thought of as similar to a sole proprietorship. There's a similar type of relationship in that it's not basically a separate legal entity. However, with a partnership, you do have the problem of needing to separate or have an agreement on how you're going to be sharing the profit and loss of the business. Therefore, although it's not a separate legal entity, you often still need to file a separate tax return so that that tax return can be used to generate the K-1s, which is the flow through of the income or loss that will then be used to bring that flow through to the individual tax returns on the 1040. That separate tax filing and the relationship of the partnerships makes it a little bit more complex both to file and possibly a little bit more complex to close, even though it's not quite as difficult as a incorporated entity like an S corporation or a C corporation or possibly a limited liability company, those entities basically being separate legal entities, the general partnership not being a separate legal entity, but often still requiring that added complexity of another tax return to be filed in order to split up the equity interest of the owners. Okay, so each contributes money, property, labor, or skill and shares in the profits and losses of the business. So that's obviously the kind of deal with the partnership agreement. So you're starting a business, each partner is contributing to the business in exchange for an equity interest for a share of the profit and losses within it. So partners who want to close their partnership must take certain actions, whether they've been in business a few months or many years. They must file final forms and schedules. Here's information on typical final forms and schedules that partnerships need to file when ceasing operations. Return of partnership income. A partnership must file Form 1065, U.S. Return of Partnership Income. So that's going to be the partnership basically return. For a year it ceases operations for the final year of operations. It reports capital gains and losses on Schedule D, Form 1065. For the tax year in which the partnership ceases to exist, filers need to check the, quote, final returned, end quote, box, which is near the top of the front page of the return below the entity information. They should do the same on Schedule K1, partner share of income, deductions, credits, etc. There's a link to that here. Also, partnerships may need to file these forms with their final Form 1065. Form 4797, sale of business property. If they sell or exchange property used in their business, they also need to file the form if the business use of certain Section 179 or listed property drops below 50% or less. Form 8594, asset acquisition statement if they sell their business. Employment taxes. Partnerships with one or more individuals must make final federal tax deposits. So again, if you have a partnership and you have employees, you got to deal with the same kind of situation with the employees. Make sure to close out all the employee stuff as well as possible, because that's often where many businesses run into the most difficult type of problem. So you want to close out all the employee stuff as best you can, and close it out towards the end of the year. Even if you close the partnership like in the middle of the year, you want to follow through with all the payroll stuff that needs to be done. If partnerships don't withhold or deposit income, Social Security, and Medicare taxes, the trust fund recovery penalty may apply. The penalty is the full amount of the unpaid trust fund tax the IRS may impose on all persons who the service determines is responsible for collecting, accounting for, and paying these taxes, and who acted willfully in not doing so. So they can be quite harsh if you don't pay the payroll taxes, especially the employee portion, because the employee portion is thought of as something that was taken out of the employee's payroll with the trust and faith that you would then pay it to the government for them, because they're actually the employee taxes. Now, obviously, if there's a cash flow problem, businesses tend to run into a problem where they say, well, I still want to pay the employee. They pay the employee the net check, and then they start to not be able to pay the payroll taxes or any taxes, right? That's the thing that they start. But you want to make sure to pay the payroll taxes, because that's thought of as part of the employee pay, and so the IRS kind of sees it as taking money from the employee and not paying the payroll taxes. Therefore, you want to make sure to pay the payroll taxes, and that'll save a lot of problems in the future as much as you can. Keep up to date on the payroll taxes. So a responsible person can be a partner in a limited partnership or limited liability company, employee of a partnership, an accountant, or someone who signs checks for the partnership or has authority to cause the spending of business funds. General partners are fully liable for unpaid employment taxes, not just the trust fund amounts. Partnerships need to file Form 941, employer's quarterly federal tax return. So that's the quarterly return. You typically got to keep up to date with the quarterly return if you have employees, or Form 944, employer's annual federal tax return, if that's applicable, for calendar quarter in which they make final wage payments. So you want to make sure you file the 941s up through the final quarter that you're making the wage payments, and then although there's a tendency to say, okay, this thing's done, I don't want to deal with it anymore at this point, you still want to follow through at the end of the year with the year-end forms like the 940 and the W-2s. So they check the box and enter the date final wages were paid on line 17 of Form 941 or line 14 of Form 944. They must attach a statement to their return showing the name of the person keeping the payroll records and the address where those records will be kept. Partnerships must file Form 940, employer's annual unemployment, that's the FUTA tax, F-U-T-A, tax return, for the calendar year in which final wages were paid. So that's the year-end tax return. You want to make sure you follow through with the year-end 940 tax return. They need to check the box D in the type of return section to show that the form is final. Partnerships also need to provide Form W-2 wage and tax statements to their employees for the calendar year in which they make final wage payments. Generally, they furnish copies B, C, and 2 to the employees. They file Form W-3 transmittal of income and tax statements to transmit copy A to the Social Security Administration. Reporting due dates, visit irs.gov for information on employment due dates. Other reporting for partnerships with employees. If employees receive tips, the partnership must file Form 8027, employer's annual information return of tips income and allocated tips, to report final tip income and allocated tips. If the partnership provides employees with a pension or benefit plan, they need to file a final Form 5500, annual return report of employee benefit plan. Partnerships with pay contract workers. So if you have contract workers here, partnerships report payment to contract workers who they've paid at least $600 for services, including parts and materials, during the calendar year in which they go out of business, on Form 1099 NEC, or non-employee compensation. So this is something that typically happens at the end of the year too. So if you closed in the middle of the year, then it's likely that you might say, I don't want to deal with this anymore. I'm kind of done with this whole thing. But you want to make sure you follow through with the 1099s as well. Make sure definitely to follow through with the W-2 information, employee information. That's where most problems happen. But you also want to follow through with the 1099 type of obligations as well, just to close up everything as neatly as possible so you can move forward to whatever the next business venture will be. So some filers must file Form 1099 electronically. Those who file paper forms must file Form 1096 annual summary and transmit of U.S. information returns to transmit paper copies of Form 1099 to the IRS. Record keeping. How long a business owner should keep documents, there's a link to that here if you want to do some more research on it, depends on several factors. These factors include action, expense, and event recorded in the document. Businesses should keep records relating to property until the period of limitations expires for the year in which they dispose of the property in a taxable disposition. Business owners should keep all records of employment taxes for at least 4 years. I would keep the employee information longer than that, because again, that's where a lot of problems happen. It might happen on the employee kind of stuff, and it can be kind of complicated with all the withholdings and everything and the reporting requirements and whatnot. So I would hold on to that stuff for a while in a safe place, so that you don't have problems with people accessing it with social security numbers and whatnot. but you have it if you need it to respond to any problems. So employer identification numbers, once the IRS has assigned an employer identification number to a partnership, it becomes the permanent federal taxpayer identification number for that business. So the EIN number, because it's an employer identification number, you may think of it as just like an employee thing, so a payroll thing, but it's really kind of the social security number of the business. So you think of it as kind of the social security number, and that's another thing that you may want to close out, of course, when you close out the partnership. To close the business account, partnerships need to send an IRS a letter that includes the complete legal name of their business, the EIN, the business address, and the reason they wish to close their account. If they have a copy of the notice that the IRS issued with the EIN assignment, they should include that with the letter. They should write to the IRS at Internal Revenue Service, Ohio 45999, Partnerships Vet. And so if there's certain things that are included or problems with the partnership, then you can't close the EIN number. The most clear problem would be like if the partnership owes taxes, owes money, then the IRS can't close the EIN number before the money's paid because they need the EIN number with the money payment so that they know who paid the money. So everything has to be paid up and all problems have to be dealt with before you can basically close out the EIN number, which is tied to those problems. So partnership that made 1, a federal tax deposit or other federal tax deposit, 2, are liable for any business taxes, or 3, are notified by the IRS that the business tax return is due, must file the appropriate tax returns before the IRS can close their account. More information can be found at the links below. Publication 541, Partnerships, Closing a Business Video, Small Business and Self-Employed Tax Center, Paying Yourself, Publication 3402, Taxation of Limited Liability Companies. IRS provides guidance under the CARES Act to taxpayers with net operating losses. There's links to those items here. There'll be a link to this in the description.